This is Sam in Portland, Oregon, interested in Brinker, ticker symbol EAT.
Yeah, but this rings a bell. This isn't one that has been on my radar, but maybe while I'm looking at the chart, Sip, do you want to look to see what Brinker's all about?
I feel like they have a killer ticker symbol name, and you would assume that it's a food company.
Yeah, I would assume that it's like a holding company for a bunch of fast food brands or
Oh,
something like.
Chili's. Okay, they
Yes,
own all the restaurants.
Chili's. Is Chili's in the same family as like Macaroni Grill?
Chili's, Maggiano's, it's just wings.
Oh, neat. Well, there you go. That's Brinker. Um, Look at that. That's an interesting. So they make money. I love that. Uh, they also they're not giving us a dividend, are they? That's okay. They don't have to give us a dividend. Let me go back about 2 years. Yeah, they're constantly making money. And look, they've been in this same zone between about $25 and about $40, maybe a little bit more, $45 for the last 2 years. It's not the most reliable choppy pattern, meaning it's not as consistent, but it has stuck in that zone. And so, you know what? This is one that I think I would just trade the signals as they come. Let me zoom back into a 6-month chart. It looks like we're, playing around with an all-time high for Brinker, at least a 2-year high. Um, I almost wonder if now is the time to be thinking about taking a short position against Brinker. And we can do that two different ways. We can either short the stock outright. That means we borrow shares of stock from our broker and then sell it at a high, hoping to buy it back at a low and, fulfill our requirement with our broker, return those shares that we borrowed. So that would be shorting. You could short the stock, or a alternative way to do that is to buy a put option, right? And we want to buy a very specific put option. We want to go deep in the money and far out in time. So let's look at Brinker's option chain. You can see I'm going way far out in time. In fact, I'm back on my leaps again out in 2025, third Friday of January. And it looks like I'm probably targeting like the $25 strike price, maybe even the $20 strike price, something like that. $25 strike price. The bid ask spread isn't so, I probably get that for somewhere around $21 a share instead of spending $44 a share. And that's a debit, right? When you buy a put, goes opposite the stock price. So if you buy a put and the stock goes down, your put appreciates. That's kind of like shorting, but shorting requires you to have a margin account, and you have to do all this stuff behind the scenes where you borrow your broker stock, sell it at a high, buy it back at a low, and you make money that way. Or you could take the easy route, the cash route, and buy this January 2025 $25 put. Not only do you get a little bit of a discount, you're incorporating a little bit of leverage, not too much, but a little bit of leverage, but now you're using a cash trade. So I almost feel like that's what we're up to. I'm actually seeing that I'm getting a sell signal or a short signal that's appearing. It'll appear on my follow through list for this evening. So after I put my toddler to sleep, I'll be checking in. And if I got that magenta arrow, if that's magenta arrow is still there when I check it tonight, then come Monday, I might be looking for an opportunity to short this. Right now, I'll be looking for the follow through that I look for during the trading day to short this. And when I say short, it means either shorting the stock outright or buying that substitute put option. And then you're set, right? You let that thing. And somebody said, "Hey, you were talking about puts, but you were looking at the call side." You're absolutely right. When I want to go deep in the money on the put side, I want to go higher in price. So we're probably talking about the $55 put option. Sorry about that. You're absolutely right. And that thing's even cheaper, right? That thing is about $12.25. So thank you for pointing that out. So yeah, deep in the money put option or shorting it. And that sets us up for making money as this thing kind of goes back down in its channel. And I would say if it dips down below about $34, I would just let it continue until it finds a bottom, and I would turn that into just a simple, trend reversal directional trade. However, if higher than $34, maybe around the $36 to $38 zone, it decides to reverse and go back up. This is where we go ahead and sell the near term at the money put option and buy a protective call. So I'd buy a call that's about 6 months out, and I'd probably use $45, $46 strike price. So you want to pick a strike price that this call will kick in on if you start to get outside of the zone. We call it the channel zone, outside of the zone, outside of your break even mark. So you've got so many options here. I would just make sure that this top signal is materializing before I short the symbol or buy that deep in the money, far out in time put option.